Welcome to Momentum Monday. Today is August 20th, 2023. Howard, has Hillary impacted your life in any way?
Well, we're doing this, hey buddy, we are doing this, what, Sunday night? It's 5 Pacific. I'm looking for our screen. Wow, how did I lose us? There we are. I got some charts I want to share. 5 Pacific, and I thought we were done about an hour ago, but now it's the worst it's been. So I'm on the island, and it's been just rainy and warm, and now the wind picked up, and it's raining pretty hard. So it's the worst of the day, but you're saying the weather is supposed to be over here by 6 in San Diego?
From what I read, it must be over, but we'll see. It doesn't.
But you get that in the Bulgarian weather forecast. You can't trust the Bulgarian; they're so far away.
Sure.
All right, fire away.
Yeah, the market is still in a correction mode. We are seeing the occasional bounces just to shake the short sellers out, but overall prices have been moving down ever since. I mean, for the most part of earnings season, and ever since that big credit rating downgrade that we saw a few weeks ago. I think it was right here.
Yeah.
Ever since then, most stocks have been kind of pulling back normal after the big move we had since the beginning of the year. And what I'm thinking about is that I still think this is a correction within a bull market. And I'm wondering if this is just a garden variety correction within the bull market, then it might look very similar to what we saw earlier in the year in February, March, when we had that big move in January when almost everything went up a lot, especially in tech.
Mm-hmm.
And then we had a first leg lower stocks. And then just when everyone was turning super bearish here under the 50-day, we had a quick bounce to the declining 20-day moving average just to shake people out. Mm-hmm. And then another leg lower, like a second leg lower, which is like how many correction take shape. They usually have a couple legs. And we might see something similar here, like that first leg, a little bounce towards the 20-day, and then another leg. And what's interesting here that back in March, during that second leg lower, a lot of the tech stocks didn't have a second leg lower. They just went sideways and kind of set up for big moves. Like, let me show you, for example, NVIDIA in March, it just kind of went sideways while the S&P and the Nasdaq were pulling back and having their second leg lower. It just went sideways, and then the moment the indices bounced, it just took off. Mm-hmm. So my theory is that there is a chance we might see something similar. Obviously, markets don't always repeat. They kind of rhyme, so we might see a version of it. But as of right now, stocks are in a correction mode. Friday, we were oversold. Market breadth was kind of oversold. And we saw, I mean, they gapped down, and then that gap down was bought, finished near the highs, which is a good sign. If it was a bear market, oversold leads to more oversold, into panic selling, and in a bull market, oversold leads to bounce. And this is what we saw on Friday. And yeah, still in correction mode. I wouldn't be surprised if we see some bounce here in the next few days. A lot will depend on NVIDIA's earnings. Like, definitely the leader.
Yeah, they're out Thursday, so I think it's going to be quiet, relatively, or choppy until then. But it does feel like people, including myself, are a little bit too bearish. I'll share some charts that just interested me that I shared on.
You want to share it now?
Sure. Let me just go through them and then we can talk about them.
Okay, I'm stopping my sharing and then you go.
Can you see my screen?
Not yet.
I always screw this up. Can you see me now?
Yeah, we can see your screen. Google outperforming Microsoft. Yeah, we can see it.
All right. So I thought this was, listen, I mean, the market is in the hands of the leaders right now. They're in a small correction. The FANG stocks right back at where they got back to all-time highs, the FANG index, right? Facebook rallied, Microsoft and Apple rallied, Amazon starting to rally, and Google. You can see here with all the chatter about ChatGPT the last 6 months, right? The hype behind the hype, right? Everything was aimed at Google. Like search was going to suffer. But now you look out 6 months after the hype, right? And Google is outperforming Microsoft, right? So that is the biggest tell of this correction so far, is that after all that hype, they have to make up. And I told you Google was dead. Google has the most unique. They acquired a lot of their products like YouTube, but compared to and Microsoft's done their acquisitions too, I think Google's in the best shape of all the FANG companies because of search and because of YouTube. So I'm watching. That's the one I'd be the dip buyer in, along with maybe some Shopify and Apple. But I'm keeping it pretty simple here because unprofitable tech companies are getting hammered. And I'll get to those in a bit. But that's one that I thought was interesting. Another one that I thought I should share, if you can see this. Can you see this?
Not yet.
What about now? I can't. How about now?
No. Yeah, now we can see it.
Downside protection? I wonder why they're... Okay.
Exactly.
So downside protection has never been cheaper. Are you seeing that?
Yeah.
So the question is, are you a sucker for buying some protection here, or smart? I don't know. I'm not much of a hedger, but I would say if you're nervous, and you own a lot of indexes, you can try, a hedge a couple months out, right? This is seasonably a weak period. So, but the data zone goes back to 2008. Okay, next, you can see this.
Yeah.
Got that?
What's next? You need to remove this one.
Do you see the energy one?
No, not yet. Just close this one and then open the energy.
Sorry, guys. What about I have to share my... Okay, how about if I share... What about now? Can you see my desktop?
Yes.
Messy desktop?
Yeah.
Okay, so you can see all energy is not created equal. So we'll see if I'm along a little XLE, but you can see how different energy can be. Wind, solar, what's the other one? Clean energy in the toilet for 3 years, basically, right, Ivan?
Yeah.
So not all energy and inflation is created equal. And the true king of energy is still oil, right? And this chart kind of proves it. So I guess unless nuclear and uranium is, I don't have any charts, but uranium, all the big guys are buying CCJ. We'll get to that after. But so I thought this was interesting, right? It's just really energy is all about.
But it's inflation related, Howard. Anything that was like a commodity went up in price in the past few years, and anything that was depending where the commodity was a cost has been struggling for the most part.
Yep. And then you see this, companies with negative earnings?
Yeah.
This one worries me because they also have a lot of debt. Like there's never been, I saw a chart earlier, I'm not going to share it, but a lot of these companies can't even afford their debt, these unprofitable tech companies and small businesses. So interest rates are rising, and I think on the edge, again, it doesn't affect FANG. I mean, all day today I was on YouTube working in Gmail, and you and I are on Zoom. Like, it's not affecting. This is not like 2000, right? Like but at the same time, there's a lot of problems out there hidden underneath these mega caps. And so companies, more than 40% of the companies in the rest of 2000 have negative earnings, right? So that's not good. higher rates are going to affect consumers at some point as well. So you can't just say rates are going to go down and everything's going to be okay. So I think that's something to think about. Can you see this chart?
Yeah.
Obviously, no one cares, but a lot of America's wealth is tied up in REITs, old money, and we're at 2008 kind of pricing for a lot of these REITs, and everybody started to borrow. So the question is this capitulation, or is this the beginning of the end for commercial? Don't know. I'm just one chart, but I thought this was pretty interesting. Let's see what else I got. So I'm gonna close that. Close this one. Close this one. I thought this one was interesting.
Okay.
Can you see that?
Growth versus value.
Yeah. So JC, the value stuff is starting to come back into vogue here. And then the semiconductors, I think Thursday is a big day with NVIDIA, but like FANG, you know, maybe an oops moment here for the semiconductors. So
I'll go back to sharing.
So I think there's seasonally, this is a tough time. Back to school, vacation, the changing of seasons. But at the same time, the leaders look good still, right? Just
Google's still holding well. Amazon, they're just going sideways, basically.
Yeah, but Shopify was going sideways and kaput, right?
Yeah.
I mean, we're starting to see stuff that was going sideways. You know, they weren't the best performing relative strength stocks for the last 5. You know what I mean? Like and then let's go to fintech, which is like MasterCard and Visa are holding up, Ivan, and maybe they should. You know, they are the king of the 2%. But everything underneath them, all the promise of fintech is an implosion from PayPal.
Yeah. Okay, let's see.
Yeah, PayPal to SoFi, and I don't think SoFi is a bad business. I mean, it's a great bank, but it's a Web 2 0 interest rate child bank. Same with Square, which is now Block. I mean, what does he know about running a business in a bad market? He's a poster child of Web 2. Not that I'm not, but I'm not running a $30 billion company that paid top dollar at acquisitions at the top. So even Goldman Sachs is struggling here. So I worry about these fintech companies. You saw Adyen blow up. I mean, these are massive gap downs. ADYEY. And I own this stock. I own a few. Anything in the fintech, I own a little bit.
What happened here?
Yeah. I mean, these are not just small moves. These are like gap down 50% move after being down 70%. Right. So these companies are doing billions in transactions, and the world is just saying, you know what, we don't know.
30 billion.
If you guys can make money at scale. This is a competitor to Stripe, which, you know, you look at the rally here. Stripe got a deal done at 60 billion. So if it's down another quick 50%, or you know, based on what Adyen is, you know, you're back down to 30 billion on Stripe. So there is just a lot of pressure in the system. And a lot of the Web 2 promise, it disappears again, right? Like you basically have Uber and Airbnb as the poster children, the last people standing from, you know, WeWork bankruptcy, I think. Like, so I'm trying to think of these, remember how great, you know, this ZERP environment that created supposedly thousands of companies in the consumer space. The money is just gone Louis, and you know, most of that money stayed in the FANG stocks. So, you know, there is reason for concern, but again, the way most people are invested in our economy is through indexing, and that's masking a lot of this pain. So you know, that's kind of what I wanted to, you know, talking about momentum, the indexes look fine. QQQ looks fine.
So far, yeah. I mean, it's just a normal garden variety pullback. I mean, the Nasdaq 100 is still up, what, like 35% year to date.
Yeah. Yeah, you look at Adyen, you look at Square, you look at PayPal, and you just see the carnage, right? Coinbase, crypto.
Yeah, the mega caps are just carrying everyone.
Yeah.
So,
and that applies to crypto. Bitcoin and Ethereum are carrying, everybody, and energy's is being carried by oil.
it's doing a little bit better. Yeah,
it's kind of like everybody's hiding out in the old economy in many ways, and it's our 2000 moment is crypto. Like NFTs down 90%, most crypto projects down 90%, other than Bitcoin and Ethereum. So there has been that crash. And in unprofitable tech, you look at the IPO index, that's a big
20%.
Yeah. That's a big pullback. So
yeah,
again,
20%.
I guess you would consider that unprofitable tech at this point, the IPO index. And then the other thing, Ivan, is I was going to say it's ARK. That counts as unprofitable. ARKK.
Which one?
ARKK, Cathie Woods.
Oh yeah, okay.
A huge pullback too. Anything unprofitable.
Yeah, she's down like
20%. That's like 6-7% in the S&P and 20% for unprofitable. And then a couple things I was going to share one more time if you want to share, if I can share my screen. I was just going to walk
people. Let me stop sharing. Okay, go ahead.
Yeah, I was going to show people how I use Koyfin here. My puppy just came into the room. Hang on. Can you see that, Ivan?
Yeah, just
a lot of people were asking me how I track the markets, and obviously I use StockTwits for just journaling. But you can see this is kind of the main home screen here. If you can see, everybody kind of gets.
Yeah, we can see it.
So I was going to take people like this is something that they have. It's here under my dashboards. And hang on to this. Where is it? Oh, my dashboards. Sorry, just looking. Let's screw this up. I wanted to show people. Today's market. I guess I will do this. Why did I move this? Sorry, buddy. Market dash. Oh, here they are. So everybody has this market dashboard thing. If you sign up, it's free, right? And so here I can track countries. It just quickly tour around the world. So you can see Greek #1 in the world. You can search by sectors. It just really quickly, world equity indexes, global yields, which I think is really important. So this is one chart I wanted, and you can track this every day. This is all just built in for everybody. So this is like Bloomberg type quality stuff that people can just get for free. It maybe not interest, obviously, to swing traders, but for lean back investors like myself, you can really start seeing what happened. Look where yields were going before COVID. They're kind of on trend if you take out COVID, that rates were starting to go higher. And then we had this flush here, right, where everybody had a cut, global easing. And that's kind of what created that NFT crypto SPAC. Got everybody kind of stuck in at the last moment. I think the question here is, if we didn't have COVID and rates had kept over, what would have happened? And so the question here is, are we being tricked? And are high interest rates coming for FANG, right? Meaning they're not, it's not 2000, but you could see 30-40% pullback just to get the valuations in line in Apple, Amazon, Google, right? They're still trading at monstrous valuation. And so this is a great way. You can see this is all pre-built, so there is no excuse for the average investor anymore not to have, from yield curves to factor investing. People should start getting used to reading all this if you really want to see how the S&P and the Qs and all these markets work. Really nice pre-built stuff. Anyways, wanted to share that because people have been asking me how I kind of stay in touch.
Yeah.
Price and volume, MarketSmith, one of the best products. That's kind of sponsors the show. Let me just get off screen share. I'll stop sharing.
Okay.
And for 90% of what I do, price, I think for you too, it's just kind of price
It's a good shortcut, yeah, for in most cases and for most people.
You want to go to the next level and really kind of understand intermarket relations. I really highly recommend Koifin. They've really figured out how to set this up for just every type of investor.
Yeah.
Anyway, so what else are we going to share here, LVMH?
Oh yeah. So I just wanted to compare the price action in some of the retailers. So we have LVMH, which is obviously luxury brands, having a kind of 20% pullback, 15-20%, just like everyone else. But at the same time, if you look at the discount retailers that they just reported earnings, something like TJ Maxx and Ross, they're near all-time highs, and they continue to show relative strength. Obviously, these are slower growing businesses, boring businesses. But if you look at their longer term charts, over time, they've done extremely well.
I don't think that is really an incredible.
Yeah.
Where is it? $100 billion company that I've never shopped at, I think.
Yeah, I mean, they own several different brands. I think one is like Home Goods, other discounts.
Yeah, and only trading, probably, they've got their business figured out like Costco or Walmart, only trading at 20 times earnings.
Yeah, and then we have Ross, which is kind of similar.
A lot more volatility in a Ross.
Yeah, and also longer term, they've done really, really well. It's one of those businesses that sneak up on you. Yeah, you will never expect, but they have outperformed the S&P by many, many times. They've done really well.
Yeah, and it's also a $40 billion company. I was going to say the other one, the $5 store. I forget what this ticker symbol is. That continues.
Five below.
Yeah, Five Below. My daughter loves that.
Again,
a little more volatility, but
it's up 10 times basically since IPO.
Yeah, my daughter loves that store. It's a lot of volatility, but again, I think I was reading anything that Bill Ackman, as much as I'm not a fan.
The Chinese one that is, I mean, obviously China now is untouchable.
People that own the biggest retailers are the wealthiest people in the world in general. So it's like go across any country, well-run retail kind of dominates. That was a Bill Ackman thesis. I think he owns a lot of Chipotle's. But anyways, that's what I say about Koifin. The market is made up of sectors, and there's a lot of great companies that aren't tech companies that are benefiting from tech. But anyways, I'm with you, Ivan. I think you call this a correction for now. Underneath the surface, if you own unprofitable tech companies, like look at Farfetch, which I kind of dabble in.
Some of them are really getting hammered.
Anything that doesn't have profits is done. Okay, like you got to take your losses. Your first loss is your best loss. If you're speculating and unprofitable, you are getting punished, and we're all guilty of that at some level. So if you're speculating on unprofitable stuff right now, the market is telling you you're crazy, but people are, and they continue to do so. So the question is, when do they come for the leaders? I think they've already taken out a whole lot of them.
Post earnings, Apple and Microsoft, they have already. I mean, it's not a big pullback; it's just kind of normal. But they definitely have a little sell-off post earnings.
15%, yeah.
Would I be surprised to test their 200-day? Like if that would have been like a 20% pullback. And I think Nvidia.
The Qs in relative to the 200-day.
The Qs are very far from it.
So you say like there is some room here. I mean, they really have had a good run.
Yeah, like, I mean, they're still up a lot, 35% year to date. That's a really strong.
And I think people have to realize if there is some kind of event that the market's foreshadowing with this complacency, you're seeing events in unprofitable stuff across sectors. But if there's some kind of event and how are you going to feel if the NASDAQ gaps down 10-15%?
Yeah,
in a couple of weeks. You've got to think about what your field position is here. But for now, I think it's kind of just a healthy pullback, like you said.
Yeah, it just depends on your time frame, but it's still not a time to be aggressive, I think.
All right, buddy.
Okay, let's finish with that then.
All right, have a good week.
You too. Bye.